Well, indeed, good afternoon. Welcome. KTN Business Today starts right now. My name is Peter Kaba, coming to you live from our Standard Group Center studios on Mombasa Road on this cloudy, rainy day, the 21st of May 2018. From us here, it is thank you for joining us for the next 1 hour where we bring you up to speed on matters making business headlines, not just here in Kenya, but indeed across the region and indeed right across the world. Today, an interesting show coming at you from several different places, of course, bringing you up to speed on the various stories that are moving your economy, your money one way or another. First off, of course, the fact that we have predictions for heavy rain, and indeed that weather is expected to continue deteriorating even further, despite the fact that we have been told that the rain might start to cease in several different parts of the country. What does that mean for you? That is later on in the show. Also on this show today, two very special guests. First off, Edward George, Dr. Edward George, I might add. He is the country head for the UK and head of group research across the EcoBank Group, a man with years of experience in matters economy, especially around financial technology, the, economy in general, and of course, around commodities. He is here to speak into what exactly we can expect from the Kenyan economy going forward, especially with a view to looking at the trends of the prices of various commodities out there. How will that affect you and your money? That is later on in the show. Also present with us here in studio for conversation later on, Dorcas Wainaina, the first ever executive director who is a lady at the Institute of Human Resource Management. She is here to talk to us about developments in the sector of human resource management, giving us an update on how far they are with implementing the newly introduced regulations, of course, out of the operationalization of the human resource law that came into play very, very recently. Of course, they will also be having a conference that is later on this week. What exactly is that perspective? Well, you don't want to miss that also on this show. As ever, we want to start off with a quick look at the markets. We, of course, will bring you up to speed on what exactly the currency pairs are saying today, the Kenya shilling versus the sterling pound, the euro, and the dollar. Starting off with a dollar, quick look, buying at 100.44, 164, that is buying and selling levels respectively. The pound sterling pegged at 135.33, 135.6 for buying and selling levels, while the euro is pegged at 118.22 buying and 100.49 selling. Well, let's then look at what exactly is the tone at the Nairobi Securities Exchange. These, of course, are the details of the last trading session. Overall market turnover, 3.3 billion shillings worth of shares bought and sold. Shares traded, some 97.7 million various shares there changing hands. The NSE 20 share index pegged at 3,494.17 points, while the bond turnover is pegged at 11.9 billion. Of course, remind you that these numbers will continue to change for the next few minutes as the market continues to settle after market close. Now, the most active stocks of the day, those that are driving trade: Safaricom, Equity Bank, Cooperative Bank, and Kenol Kobel. Safaricom, 8.48 million shares bought and sold. Equity Bank, 2.14 million. The Cooperative Bank, 1.88 million shares there, and Kenol Kobel, 1.87 million. Well, then, what are the bears and the bulls of that trading session? These are the winning stocks of the day: Longhorn, Deacons, Home Africa, and Sanlam. Longhorn trending upwards 9.52% to 4 shillings and 60 cents. Deacons bullish to the tune of some 8.57% to 1 shilling and 90 cents. Home Africa gaining 5.88% on the day to 90 cents. And Sanlam up 4.17% to 25 shillings flat. While the bears of that trading session, the losing stocks, Athi River Mining Cement PLC down 10%. They're hitting the limit of its day's movement to 4 shillings and 5 cents. Sasini shedding 9.09% to 22 shillings 50 cents. And Scan Group down 8.82% to 15 shillings and 50 cents. Now, Home Africa down 7.55% to 2 shillings and 45 cents on the day. Well, that is the barometer of the entire economy. What exactly is the economy saying today? These are the big stories for you now. The Kenya Meteorological Department is warning of heavy rain between today and tomorrow, that is Monday and Tuesday. Now, in an advisory released on Sunday, the Met predicted heavy rain starting at about 3 a.m. Monday to 9 a.m. Tuesday in parts of the western, central and north Rift Valley, in the northern and central regions. And I hasten to say they have been accurate. Now, the KMD says the heavy rainfall of more than 50 millimeters is likely to affect counties such as Turkana, Marsabit, Samburu, Mandera, West Pokot, Elgeyo Marakwet, Nzoia, Uasin Gishu, Nandi, Baringo, Nakuru, Kericho, Bomet, Kakamega, Vihiga, Kisii, Nyamira, Laikipia, Nyandarua, Kiambu, Murang'a and Nyeri. The weatherman is therefore advising residents in urban areas, especially in those areas, to be on the lookout for potential flash floods. Residents in landslide-prone areas in Murang'a County have also been advised to be on high alert. Well, of course, from us here in studio, it is to advise you to try and stay dry. Now, moving on, Britam Holdings PLC and the Nairobi Securities Exchange have rung the bell to commemorate the official admittance of AfricinVest, a private equity fund, as a shareholder at Britam. The event marked a successful completion of the previously publicized acquisition of a 14.3% stake by the private fund in the diversified financial services company after November in the year 2017. Britam shareholders approved the 5.7 billion shilling bid by AfricinVest to buy 360.8 million new ordinary shares in the firm at a subscription price of some 15 shillings and 85 cents per share in November of last year. The CMA has now approved that transaction.
You have made a milestone change to the exchange, giving us an additional 5.75 billion market cap and taking us beyond our 30 billion market cap as we aspire to get to 40 billion by the end of this year.
When we look at Britam and we look at where it's going, we looked at your strategy going for gold, we looked at what you can do, the potential. We felt that this was the right group to work with. And having interacted with the senior management team and the directors, we felt that there is a chemistry, we can work together. It's not going to be easy, but for sure Britam is definitely a star today and definitely one of the stars of the future.
We envision that we should be number one through deploying the strategies that we are talking about in our Go for Good strategy. We are looking to strengthen our regional enterprises so that they can make a bigger contribution, not just in revenue, but in profitability. We are seeking to cut costs through improved operational efficiency and increasing our customer numbers from our current 2 million to in excess of 10 million.
Well, staying with financial news, globally active investor Triodos Investment Management, through its Hivos Triodos Fund and Swiss impact investing advisor Alpha Mundi Group Limited, have partnered to launch a 2.3 billion shilling Kenya shilling partnership to form a new impact investing fund for sub-Saharan Africa in 2018. Now, the 2 billion shillings shall be invested within the next 3 years, that is by December of 2021, primarily in SMEs operating in the sustainable food and energy sectors.
We've invested a substantial amount of capital from private investors who are mostly European in East Africa, and it is a very dynamic environment here in Kenya. Kenya being the hub of impact investments for the region. You have a lot of wonderful entrepreneurs and very innovative social businesses that are growing fast to provide first-time access to products and services that maybe were not offered before to low-income and middle-income Kenyans and East Africans. First-time access to solar energy in your household. First-time access to productive microcredit for your business. First-time access as well to fair prices for your products as a smallholder farmer. These are all things that we are keen to finance, to invest in, and to develop. And if possible, we like to do it with local investors. But as you know, for the time being, many banks are quite conservative in their financing of social businesses in the region. And it is our job to make these social businesses attractive to local investors, including local banks.
Now, staying with the financial sector, the Kenyan payments sector appears to continue in value addition. This after financial services companies Standard Chartered and Financial Service Corporation Visa partnered to offer a reward system based on credit and debit cards. Now, this comes at a time when financial institutions are looking to net loyal new customers through enhancing costs and convenience, while at the same time offering incentives to purchase new products via loyalty systems. Now, dubbed 360-degree rewards, the product will allow consumers to process cashless transactions and redeem points to purchase items using their credit and debit cards. The partnership between the two entities is expected to bring on board local retailers and reward users with points based on every...
Use your card to purchase goods. Don't withdraw cash from an ATM, just use your card to purchase goods. As you use the card to swipe and to buy goods online, you get rewarded. And next time you're thinking about maybe traveling to Kisumu, you'll just check your points and you could get a ticket to just travel there without necessarily paying for it.
So we feel that, you know, the scope of digitizing payments is enormous. We just have to capitalize on it. Everyone seems to be actually looking for an opportunity to be able to actually have either an app or a solution to be able to capture a certain target base. So we are now just at the forefront, or at the beginning of that revolution that we see today. And we need to be there to provide that convenience to the consumer, because that consumer tastes are changing.
Well, of course, that story there, very important, because a majority of transactions, especially in terms of just pure transactions, remain in cash here in the country. Now, away from the financial sector, and this time to land. Now, the elders from the Keiyo community are up in arms against an alleged move to grab their land by powerful cartels. The elders have vowed to fight for their land, which they say was handed down to them from their ancestors. The controversial land in question, measuring about 1,100 acres, had been reserved for the now defunct Flowspur Company of Kenya, which shut down its operations recently. They want the land to automatically revert to the community unless a new process is initiated to set aside the land for any other purpose.
Wale ambao wanapanga mipango mbaya kwa ajili ya kuchukua shamba hili, tunakataa na tunasema watu ya Gapterik hawezi kubali. Kwa hivyo tunataka kuomba serikali ambaye ni serikali ya Uhuru na Deputy President ambaye ni William Ruto, kwamba wajue sisi kama Gapterik hatuna shamba lingine mahali tutaenda. Kwa sababu hakuna mahali pengine tutahamia. Ni hapa ndio kwetu na tutakaa hapa mpaka mwisho.
It does not take rocket science to know that this is an extension that may possibly be an oil exploration zone. It does not take a rocket science to realize that people decided to build a dam there up for the purpose of Kimwarer, because they want to grab it and grow fruits. It does not take rock science to tell that the same grabbers want to convert it into a national park and sell it.
Well, of course, there are issues around engagement of the community in various projects does come up, and then, of course, over to the National Land Commission and the Ministry of Lands. Now, workers at the Mumias Sugar Company may finally be completely laid off, as the company is now unable to continue operations due to the huge debt burden that it currently bears. The company owes farmers billions, even as these farmers continue to leave the sugar sector and start to focus on other areas of agriculture.
Kampuni imeanguka kwa sababu ya management mbaya. Juzi nimechukua MD wa hapa Aseka na chairman. Niliwasamon kwa ofisi yangu, nikawapeleka kwa Deputy President. Tukasikizana ya kwamba kitu inaumiza Mumias Sugar number 1 ni wage bill. Tukakubaliana lazima mtaenda mpunguze hawa wafanyakazi wanakula mishahara za mamilioni kutoka kwa 1,400 mfikishe 700. and then tutafute another 1 billion Kenya shillings, tupatie hao wafanyakazi wenye wameambiwa waende nyumbani, wapewe pesa yao, wakwende nyumbani. Tutafute another 1 billion Kenya shillings, wakulima wanadai hapa over 600 million, wapewe pesa yao, waendelee ukuzaji wa miwa.
The Kenya Meat Commission KMC has partnered with a Turkish agency to improve livestock production in arid and semi-arid counties. KMC Managing Commissioner John Leriamo says the commission had gotten into the agreement with Turkish International Development and Coordination Agency, TICA, to develop livestock feedlots in the counties. Leriamo said the project is intended to improve livestock production and value chain management in the country, especially in the northeastern counties. He addressed the press at the sidelines of the KMC Stakeholders Forum at the factories plant in Athi River in Machakos County that was attended by farmers, development partners and representatives of Frontier Counties Development Council. It covers the northern Kenya pastoral counties.
At least to come and develop feedlots in the county government, which is a catchment area where we get our livestock from. The raw materials, which are livestock, are reared and they are kept by farmers. Farmers produce them, but we can hardly get cows who are more than 100 kilos dead weight. And we went as a Kenyan delegation to Turkey, where we visited several places in Turkish countryside, and we've seen how livestock is being produced well. The value chain in terms of livestock management starts from feeding. And then there is the component of breeding, the component of disease control, and the last part is the market part, where it's delivered to be slaughtered at the abattoir. So the exchange program is between Turkey and Kenya, where Turkish, through the TICA, have agreed to invest in production of animal feeds in various parts of this country, mostly in the ASAL counties, where land is plenty. It's only that utilization should be done of the land to produce the animal feeds.
This industry is not being given sufficient attention, either by the government or by the decision makers in this country. So together, we can approach the markets and negotiate for better prices. We can also negotiate the government to give us a support, just which is as important as those given to maize producers, miraa producers, tea producers, and also coffee producers.
Well, they might generally need to travel to Japan to benchmark against the product called Wagyu beef. Now, ICT delegates have been called upon to come up with systems that will help the government attain its Big Four agenda. In preparation of the Connected Summit to be held in October, the ICT Ministry promises to provide the right tools and infrastructure to achieve this. The summit has registered growth in the ICT industry since the year 2009.
So basically today we are actually seeing the pioneer of the Connected Summit that is set to happen at October, during the month of October, from the 23rd of October. And basically what this event is all about, it brings all the ICT delegates together under one umbrella in which they discuss matters concerning ICT, how they can improve the sector, what needs to be changed, and the challenges they are also facing. And this time around, what is unique about this event is that we are going to see ICT ministries address on how they're going to help the government in achieving the government's Big Four agenda. That's basically the process, and how they're also involved. Being that the government this time around, they're saying they're telling the ICT ministries, the ICT officials and the ICT companies on what exactly they're doing and how they can also work together to make this happen. And this journey started back in 2009. The Connected Summit is something that has been celebrated since the 2009. And being that this is yet another year, I am joined by Nicholas Nasbit, who's the chairman of CAPSA, who might tell us how the journey who's going to tell us actually how the journey has been since then. Thank you so much, Nicholas.
Thank you, Julie.
Yes.
Yeah.
So would you like to tell us how the journey has been ever since 2009? What are the improvements you've seen and the challenges that you've also encountered as well?
So when the first Connected Summit started many years ago, the focus then was around infrastructure. And we spent a lot of time with Dr. Ndemo and the leaders of the time trying to convince the government itself and even convince the private sector that investing in a fiber optic cable was going to transform the country, and it was very difficult. From there, we started to move from infrastructure to really starting to think about how the government itself can transform the way it does business. That led to a whole series of innovations around Huduma centers, around e-citizen, and so on. Now, the conversation is really about how do we go to the next level? How do we encourage innovation? How do we encourage development within our people, within our entrepreneurs? It's really critical as we look at the Big Four, how we bring the solutions to the 4 pillars in manufacturing, healthcare, housing, and so on. And we've started to see great strides being made in blockchain, in artificial intelligence, and even in drone technology. So the focus for the summit will be about how to take the entrepreneurs, many of them who have been very successful recently, to the next level, to show them how to actually make money, to show them actually how to embrace technologies, and to really encourage partnerships with the multinationals, partnerships with the local peers, and partnerships with international players. And so it promises to be a really exciting event this year in October.
So let me also ask that we believe that these things are being implemented already. I mean, the actions that need to be taken in the ICT are being implemented already. So when we get to October, will we be able to see some of these changes in the ICT industry?
So by the time October comes, it's given us 6 months right now as a head start. We are going to encourage that there is continuous development and showcasing of this new technology. In fact, some of the players here today have announced that they will contribute to developing workshops, developing hackathons that will help the entrepreneurs and give them guidance on what to deliver. We also have a task force on blockchain and artificial intelligence led by Dr. Ndemo. We can expect a report from them in a few weeks. And this report we can expect to be very exciting because it will show just the vast amount of innovation that's happening below the radar that no one's been able to see. And between now and then, we're also very clear that for the 4 pillars, there are many, many developments and a lot of work that needs to happen. 6 months is going to go by very quickly, and so between now and the end of this 6 months period, we expect a lot of innovation and things to show off.
Right. Thank you so much, sir, for joining us. Allow me to cross over to the chair of Telkom, who is also going to give us an insight of what the ICT industry are also expected to do, being that most of the time people talk of the government doing this and that, but we also want to find out what the ICT industry is willing to do. Thank you so much for joining us.
Thank you. So, look, the agenda and the timing has been set. It's very clear that we have to prepare this big event in October. The Big Four, obviously, is a key focus. So what we intend to do for the next 6 months before the event is to prepare ourselves, make sure that we select a few key pilot projects, and then hopefully announce some key advancement at the ICT conference.
So, do you think the criteria is kind of like the criteria in which the companies are chosen to take part in this? Are you willing to give out your best to make sure that this is going to be well implemented in the government's Big Four agenda?
Of course, we are here to enable these changes. We are here to invest in these sectors and make sure it happens. That's our job. That's what we do for a living. So now we just need to, it's very certain that this will be done with partners. So we will have to prepare, some of these pilots with other partners because we can't do everything ourselves. But it's very clear that this is something we need to do.
Thank you so much. And as you've heard it, Peter, it's going to be a really long journey, but at the same time, there are hopes that this is going to be a very good journey at the end of it all in actually helping the government to achieve its Big Four agenda. And the ICT ministry has also promised that they're going to make sure all the things they have promised to deal with the manufacturing sector, with the health sector, to just make sure that each and every company delivers as expected, being that they'd already come up with a form of registration for farmers. They're planning to actually engage such forums in all other industries. Thank you so much, and back to you in studio.
Well, of course, that update there from my colleague Julie Owino. Indeed, thank you very much. On that note, we want to proceed on a short commercial break. When we do come back, Dr. Edward George, Ecobank Head of Group Research and UK representative, and indeed head of research at Ecobank, here in studio to speak to us about what exactly, of course, first he is doing in the region, and of course speak to us about commodities, well, finance in the region, and the aspect of financial access based on technology. You don't want to miss that. We'll be back in just a couple of minutes.